Do you want to know how you can improve your trade entries within fair value gaps and PD arrays? Well, in this video, I will introduce to you a well-known concept but from a different perspective, and that is a turtle soup. So, a turtle soup by definition is nothing more than price exploiting false breakouts. It identifies scenarios where the market briefly breaks past the previous high or low of a candle, enticing traders into a breakout trade only for it to reverse sharply. This is by definition, right? So let me go to these drawings that I made for y'all. Na, 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 na. So here, let's say price is bearish, right? It is attracted to this sell side, and now you're about to enter, right? Like you're about to participate in the market. Price is inside the fair value gap, 1 hour, 15 minutes, 30 minutes, whichever case it may be. You're looking to take a trade now, right? So let's say price is here, right? Let's say it is 8 a.m. New York local time. You are wanting to take a trade, and price is inside the fair value gap. You are itching to just go to that lower time frame and look for an internal model. This concept or this knowledge I'm going to share it with you is very crucial to just wait for or to just get those beautiful one-way move trade, right? So let's say price is here. You want to enter, and then price gives you an entry, right? Gives you an entry. This place is lower, gives you a fair value gap on the 5 minutes, and then you're like, yeah, let's enter, motherfuckers. And then price just stops you out, right? Price just stops you out. And why is that? Because you might find that price, like a candle here, there's a candle before this one, and this candle closed above it, right? So there's this theory that came with this guy Romeo speculates, right? He says that a closure above is an indication that price is going to head higher. A closure below is an indication that price is going to go lower, and a wick above hashtag telesoup is an indication that price is going to head lower, and a wick below a telesoup is an indication that price is going to head higher, right? Even now in the Nagwin ICT 2022 model, that guy speaks about turtle soup, but from a different perspective, right? This one I'm trying to introduce to you, like looking for or waiting for turtle soup by just identifying it with the two candles, right? So this candle closed above the previous candle, so like it is prone or there's a higher chances that the next candle, the third candle, is going to head high, right? So entering a trade here just because price displaced lower and broke market structure is not much of a good thing, right? I used to do this. I used to take trades blindly, not knowing that this thing existed. So what I need you to do is to wait for a candle to just wick above a previous candle. Let's say price is inside the fair value gap, and then now this candle is forming. This candle is forming. What you need to do is to wait for it to come higher, and then wicks, leaving a wick, right? Higher goes higher, takes out this buy side of this candle, and then waits for it to just reverse back inside and then closes, right? Leaving a wick above. You see? Because what the market has done here is very simple. The market has taken out this buy side, right? Taken out this buy side and then displaced lower, right? Displaced and closing inside. It's very important for you to wait for a closure. Leaves behind a fair value gap, 1 minute fair value gap, or 5 minutes. And then this candle here, which is the one we usually enter off on, goes higher to mitigate this fair value gap and then gives you a smooth ride off, right? That's all you need to do. Wait for a candle to wake above when you're looking for bearish prices and then close inside. Okay, official, right? So let me show you how waiting for a closure can help you. Right. So now let's say this is a 9 a.m. candle. It's still forming, right? Still price is live. still forming, still forming, still forming. Um, now this is a 1 hour fair value, like 1 hour candle inside the 1 hour fair value gap. Price takes out this high. Price takes out the high of this candle. It is bullish now, and then goes lower again, right? Gives us like because like in this scenario, like it could be something like this, right? This is the candle, and then price goes higher. Right? It gives off like this structure because a candle is a range, right? It's giving off structure. It's giving off structure, and then when it goes lower, right? When it goes like it was here, right? Then it goes lower, like leaving a wick. This is the high of this candle is this candle, right? This is this candle, and this is this. This is the price range of this candle. Goes higher, goes lower, gives us a fair value gap here. We're looking to enter now because price has wicked above, right? Like this. This has wicked above, but then this guy closes above, like it's 10 a.m. now. Like it's supposed to close at 10 a.m. It closes slightly above here, right? You are already inside. It's not above this wick, but slightly above. You're already inside your entry. The next candle, what the next candle is likely to do is that it will go higher. Let me just fix this here. We've closed here, just above. The next candle is most likely to head higher also, right? Taking out these buy sides because, as I said, the closure above is an indication that price is likely to head higher. A closure below is an indication that price is likely to head low, and a wick above is an indication that price is likely to head lower, right? But this guy closes above with you inside the trade. The next candle is most likely to do what? Continue. Like example, gives you a false hope that it is going to head low and then just like wah, goes high, right? But here, the trick is the difference is this guy just takes out these buy so sides. This candle takes out these highs, right? Taking out these buy sides. But the difference is this candle closes inside this range, right? Then this candle turns out to be a bearish candle, leaves behind a wick, right? It leaves behind a wick, closes inside this range of this candle, right? So now we have our turtle soup. This is how you can identify a turtle soup by just waiting for the candle to wake above the previous candle's high or lower, then closes inside it. This is how you can wait for our turtle soup, right? So like for our representation, just goes higher and then goes lower, taking out a low here, right? And then closes inside and gets. Then issue here leaves behind a fair value gap to enter off of, right? The third candle, which we are anticipating to head lower now, goes higher just for a bit and then goes lower again. Right? Let me just check it. And then it goes lower, goes high, mitigate this fair value gap on the 5 minutes, on the 1 minute, and then goes lower, right? Taking out this sell side and targeting these sell side, right? Like this. See? Then goes high, low. I mean, leaves behind this wick. Because this is like if you can look at the chart, prices are more same like this, right? Now, let me take you to the chart. So this is Nasdaq on the 15th. I mean on the 15 minutes. The date was the 16th of September. New York. This was our New York session. I took this trade. I took this trade. The trade I'm going to show you. The example is here. The example is here. So as I said, what do we wait for? We wait for a candle to wake above the previous candle's high and then closes inside that range. So now price is coming to our 15 minutes fair value gap. We're looking to take trades because as you can see, price is bearish, right? So to this sell side, structure is being broken. Bullish PDRAs are being disrespected and bearish PDRAs are being validated. One good sign. So now we are here inside our New York session. We are looking to take a trade. So what do? We wait for our candle to wick above the previous candle's high, tapping the PDRA, the fair value gap, or the block rebalance price rate inversion, whichever PDRA you're most comfortable using. I just like to use the fair value gaps. So here, this candle wicks above this candle and then closes. This candle closes at 7:45. Then this one starts at 7:45, closes at 8. Right. So let me go to the 1 minute where I. So here you are. I took this trade, by the way. Do not want you. I'm going to show you. I'm going to show you. As I need to and that this is all hindsight. You do not know what you're talking about. I took this trade and I'm going to show it to you. Don't have to, but yeah, I will. Just for purposes, certain purposes. So this candle closed, started at 7:45. Yeah, right. Started here. Right. Started here. Boom, 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 boom. Wait. This candle was started at like 15 minutes back. 15 minutes back. Took this high, like it's formed this high, and then our next candle took the high, went below it right up until 8 where it closed, right? So now we are more confident that we are going to go lower, right? Because there's a PDRA, price is bearish, also SMTs are involved in all of those confluences, right? This is just the final touch to get our beautiful like zero to minimal drawdown, right? This is the aim for taking such entries. So at 8 it closes, right? We have our inversion over here. We have our rebalance, redelivered price. You could have entered here. You could have entered here, but I waited for price to come for our inversion to take a trade. Right at 8, price came back higher. This is our third candle, by the way. And then boom, look at this beautiful price action. Zero to minimal drawdown here. You could have placed your stop loss over here also. Even here. Doesn't matter. The aim is to get a trade, a grand. Good trade. Even here, I took a trade also during London. I took a trade during London also. And there's a perfect example also there um, that showcases why you should wait for price to wick and then close. Yeah, this is during London. See, 4:45. Yeah, look at the timing right below where the crosshair is at. It's 4:45. So I had our 15-minute fair value gap here. This is my bellwether chart, so I usually do everything here. So price here came to our fair value gap, right? And what do you do when as a normal trader who hasn't or who is not inside my mentorship? You look for an entry here. You look for an entry here. You look for a displacement higher, manipulation, and what sort and whatnot. And then you're expecting that price would come back to your entry or your fair value gap and then goes high, right? Because this is a 15-minute candle. Lots can go on here. Lots can go on here, but you're not identifying or you're not witnessing that price. This candle closed below or is below. Even if this candle is still live, it's still printing. When it's still below the previous candle's low, you do not take a trade. You do not even go to the lower time frame, right? Up until we get this guy, right? The turtle soup, this candle closes inside. Like even if it's still printing, right? When it's still printing, you measure, you take out your line, you measure it, right? If it's to know if it's still above, like still above like this previous candle's low, then it closes inside. This candle goes to your fair value gap, your entry level or your entry point, and then just goes higher. It took me out to break even, but yeah, the aim is to know which way you like to know that price now is going to distribute. Like look at this candle. On the 1 minute is very good momentum over here. Took me out to break even. I had taken partials over here. Was aiming for this high and this high. So, but that's not the point. Here, look. Also here. Aha. Yeah, yeah, over here. I did not take this trade. No, not this one. Sorry. Here, I did not take this trade because I take 2 trades a day and I taken the above and the one above and I taken this one. So here, look, beautiful thing, Buffett. Don't take these beautiful things that I've got. So look here, 1, 2, 3. This candle, these can form an inside bar range, right? This is all just consolidation because they are within this long candle, right? This big candle. So this by default can make it a single candle, right? You're looking for an entry. What do you wait for? You wait for price to wake above the previous candle's high. In this case, this is the one because this one broke out out of these guys a single candle because it's an inside bar, like it's not inside bars, inside but like condensed to one candle. Breaks above, goes below, and closes inside. Leaves a fair value gap somewhere around here. This guy goes higher, takes mitigating the fair value gap or mitigating your entry point, then goes lower. Like this is not a short thing that is gonna hit your target, but it's a more of an idea or a blueprint of what you should wait for. Like you look here, it goes low. Even here, there's an outer block here. See, but time here, but it's pretty discussed. Like, so it's 7 o'clock. Wakes above and then goes. Your target is met. Like you carve even here. Even look. Price does not give out good movements without having to make a turtle soup or CRT according to Romeo. Even here, look. This is a double page, but it's a more advanced. I'm not even going to teach it on this channel because yeah, this is for our mentorship. This is for my mentorship. Look, boo 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 goes high, just goes. Turtle soup goes down. Turtle soup goes down. But context is also important. I'm just showing you the price moves or gives out these movements after a turtle soup. Turtle soup, wha, goes high. Turtle soup, wha, goes high. Low. Turtle soup goes high. Turtle soup goes like you can see the idea. Turtle soup over here, wha. Turtle soup, wha. You have, as you can see, turtle soup and then goes lower. Eh, Turtle soup goes high, taking out this high. Like this is here. Like Buffett, once you see it, you can never unsay it, Buffett. I promise you, this will be a game changer. This would be a game changer for y'all. So, yeah, peace out.